I believe that a lot of people concur that Ron Barron is an excellent illustration of a long-term investor. I would make an investment if I had more money. Elon has every right to be furious with the short sellers, after all. It is unacceptable for someone with Bill Gates' level of prominence to short sell Tesla. Bill Gates is going to be destroyed. I interpreted his warning shorts to imply that even a millionaire like Bill Gates may lose all of his fortune. I can't forgive him, so I don't blame Elon for not doing so. Hi everyone, we're delving into some fascinating investment-related news today. Renowned investor Ron Barron has introduced new funds that are exclusively focused on Elon Musk's private businesses, SpaceX and XA. Let's examine the significance of this and the reasons behind its popularity. However, before we begin, please remember to help us by liking this video and becoming a Tesla Stock News subscriber. That being said, let's get going. Ron Barron is not just another stock market investor hoping to make quick money. He is a visionary engaged in a potentially more lucrative and extended game. His most recent action entails creating specialized funds that allow customers to make direct investments in some of the most cutting-edge and well-discussed private businesses of our day, such as XA and Elon Musk's SpaceX. These businesses are pushing the limits of technology, from artificial intelligence to space exploration, in addition to being leaders in their respective domains. However, Barron's approach is more than just funding expanding industries. In order to establish a foundation that will support his company for a century, he is looking to the future and beyond. Creating a legacy of innovation, stability, and foresight in a market that is becoming more unpredictable is more important than merely generating profits. Barron is placing a wager on technologies that have the potential to shape humanity's future by selecting firms like SpaceX and XA. His motivation is evident and reflects his business philosophy, which is not just about making money, but also about being a part of innovative projects that have the potential to completely transform entire industries and even daily life. In addition to attempting to secure the survival of his own business, Barron is putting his clients at the forefront of technology breakthroughs by coordinating his investments with forward-thinking businesses. This approach demonstrates a thorough comprehension of market dynamics and a strong faith in the revolutionary potential of technology. In a world of finance that is sometimes defined by quick turnover and short-term gains, it's a daring assertion. A masterclass in strategic investing, Ron Barron's action might serve as a model for other investors, particularly those hoping to make a lasting impression and ensure a secure, wealthy future for their businesses. And here's the thing. Barron wants to keep these investments affordable by charging a 1% management fee. That is rather refreshing in the world of high investment costs today. The worst part, though, is that investors' money is tied up for 8 years. People, that's a long commitment. Even when SpaceX or XA go public, the cost is cut in half. Barron seems to be placing a lot of money on these businesses to not just succeed, but to become viral. A 1% fee seems like a great idea, but what if Elon decides to start producing flying cars or something crazy? It's still an excellent deal. There is more to Barron's plan. He is laying the groundwork for future investments by increasing his firm's visibility through these special funds. It's similar to using a well-known performance to sell out smaller events. Clever, huh? It sounds like a millionaire boys club, Ron Barron and Elon Musk. Is this just another rich-get-richer ploy, or may ordinary people receive a piece of that pie? Here's an intriguing fact now. He serves offshore investors with tax exemptions through Barron Cayman. Barron has made a name for himself by supporting outstanding CEOs since he started his business in 1982 with barely $10 million. And who makes more news than Elon Musk? Grab some popcorn because Gates and Musk's criticism is the billionaire equivalent of a Twitter feud. Let's change the subject and discuss Bill Gates. He recently voiced his dissatisfaction with Musk's focus on culture battles instead than climate challenges. Recall that Gates and Musk have had a tense relationship, particularly when Gates was discovered shorting Tesla shares while attempting to enlist Musk in charitable endeavors. Gates hopes Musk would refocus his substantial influence on advancing green technology, an area in which both parties have made significant financial and emotional investments. Barron seems to have the Midas touch when it comes to investing in outstanding CEOs, but are these tech titans overly preoccupied with the spotlight? Short sellers have recently been the target of Elon Musk's ire, which is nothing new for him. He contends that their activities have hurt Tesla's long-term prospects, in addition to causing an unnatural surge in the company's stock price. Musk is not merely an opponent of market forces. His ire is very personal, particularly directed at individuals such as Bill Gates. Given the wider ramifications for climate change programs, Musk sees Gates' short selling of Tesla as a betrayal. For Elon, it's about the globe, not just profit. Elon's challenge to the shorts is comparable to David versus Goliath, but who is the true big in this tale? It appears that short selling is a wager on failure. When discussing the future of our world, it doesn't feel right. As the dispute deepens, Musk and a large number of his fans are resisting what they see to be nefarious market manipulation. Consider Jim Chanos, a short seller who lost millions of dollars due to his wagers against Tesla. These bad trading choices ultimately caused his fund to fail. This instance supports the claim that disseminating inaccurate or deceptive information regarding businesses such as Tesla is not just immoral, but may also be illegal. Should there be stricter regulations on what may be said about a firm if false information has the power to influence stock prices? Elon Musk's claim that Tesla's flawless autonomous driving technology will destroy short sellers is more than just bluster. It's a strategic claim based on a history of hostile interactions with those who are wagering against his business. Elon has seen short sellers like David Einhorn suffer enormous financial losses over the years, losing billions of dollars. Einhorn's startling $8 billion loss between 2016 and 2021 is evidence of the dangers of underestimating Tesla's potential and ability to withstand market fluctuations. The same lesson is also reinforced by Gabe Hoffman's recent $100 million loss in 2023. It's not a good idea to gamble against Tesla. These are not just anecdotal examples. They highlight a larger theme in the high-stakes world of tech investment, especially in fields where groundbreaking advances like autonomous driving are at play. Tesla is changing entire sectors by pushing the limits of what is technologically possible, in addition to creating new goods. In addition to contesting a single company's financial measures, short sellers who place bets against such a business are also risking that market and technological advancements will make their positions suddenly untenable. Furthermore, Elon's cautions have weight that affects investment behavior and market views. His faith in Tesla's potential, particularly in reaching complete autonomy, poses a serious risk to short sellers' finances and mental health. It would be a financial upheaval in addition to a technological triumph if Tesla is able to perfect its autonomous driving technology. The value of Tesla's shares could rise sharply if such technology is successful, putting short sellers in a risky situation where they could suffer exponential losses. The continuous struggle between Elon Musk and short sellers is representative of the larger struggle between traditional market skepticism and innovation-driven growth firms. Every setback suffered by a well-known short seller serves as a warning and a sobering reminder of the dangers of placing bets against businesses at the vanguard of important technical advancements. As we examine misinformation as another aspect of this financial drama, the plot becomes more complex. Mark Spiegel and Andrew Left, two of Tesla's detractors, have also suffered significant losses. In addition to their monetary losses, they are charged with falsifying information to bolster their criticisms of Tesla. This brings up important issues regarding the moral limits of market commentary, as well as the possible repercussions of a contentious profession that combines financial analysis with public influence. Is it free speech to express negativity about businesses, or should it be illegal? What is the boundary? It's interesting to note that not every fund manager involved with Tesla is a billionaire or even close to one. Tell me if you require any other adjustments.